thanks for joining us. One of a number of sessions that we've got running. This one particularly, again, looking at, I suppose, the elements of investability, livability within cities, a really important part of, I think, what the real estate industry is doing and a larger part of the conversation here at EXPO Real. So thank you for joining us. We've got a super panel for you. And thank you also for joining us on demand as part of the live program that we've got here at EXPO Real. And we're going to start off with Petra here from LaSalle Investment Management, just to give a few insights on the investment side in terms of cities, and then we'll pick that up in the discussion and look at around the livability, social impact side, and how we create those and invest in those cities. So over to you, Petra.
Thank you, Richard. So, thanks for having me today. I have a few slides here to just explain what European Cities Growth Index is and how we're using it in LaSalle. So we have been doing the index for over 20 years now. It covers close to 100 cities in about 30 countries. And it's an economic index, I must highlight. So it's not a real estate strategy. It is a first step of setting up any strategy, ultimately. But it works as a proxy for real estate demand, real estate occupier demand across Europe, and especially in the current market environment, it's very important to look at which are the winning cities versus the stagnating ones. Methodology changes all the time. This year we added something what we find is very valuable, which is on livability of the cities. So we look at the weather conditions, we look at the extreme heat waves in all those cities. So it's starting to become far more important as we progress through time, really. Now, looking at the results. What you see on this page is the top 20, on the left-hand side is the top 20 cities of the index. And on the right-hand side is all the results mapped. So the dark green would be the winning cities and regions. There are close to 50 of them. And in LaSalle, we actually follow the strategy quite closely because 92% of all our AUM would be in those dark or the light green regions and spots on the map. Now, to the individual rankings, London and Paris are the two and remain the two leading cities. Why is that? They have been at the top two for pretty much since the inception of the index. And both cities, they do really well due to their size, due to their competitiveness and the ability to quickly adapt to change, thanks to their skilled labor. But it's also interesting to highlight that the economic output of the both cities combined is similar or equal to the 9 following cities in the ranking. So their scale of London and Paris really does matter. What's driving it at the moment? Obviously, we need employment growth to make sure that the occupier demand is there. We see lots of progression in technology, in IT, in software. And Paris is actually getting a little bit closer to London thanks to some of the VC funding in Paris in the recent years. And in 2022 and 3, Paris is actually overtook London for the first time in terms of the VC funding. Now, what else? What is the key message when you look at the ranking? And it would be, the next key message for me is Nordics. They really outperformed this year. All the Nordic capitals have improved quite substantially, and I can touch on it on the next slide. So why Nordics? Why do we see such a progress, such a growth in those two in the region? In our view, it is thanks to the green industries, thanks to pharma and life sciences. It seems that Nordics have been really invested in development of the right industries most recently, which really are helping their rankings going forward, and it gives the region a new edge that we haven't seen in Europe in the past. So as a result, Stockholm And Copenhagen ranked in top 5, Stockholm is 3rd, Copenhagen is 4th, but you also see that Oslo and Helsinki are in the top 20 as well. What's also interesting about Nordics that it's not just about those capital cities. Even the smaller towns in the Nordics have done very well, have a very strong economic prospects going forward, and so it's certainly a region which we will hear about more going forward. Being in Germany, being in Munich, I cannot not speak about the German cities. And two I would like to highlight today is Munich, which has been consistently in top 10 again since the inception of the index. And there are only 2 other cities that have managed that, which is London and Paris. So it has a very strong position in when it comes to resilience and future economic growth going forward. So we do like Munich in principle when it comes to the occupier demand. Berlin is another city. We will talk about it later, certainly. But you can see that little chart at the left bottom corner, where that light green line suggests that Berlin has consistently have been improving in ranks, and it's just neck to neck with Stuttgart at the moment. And what we find interesting that it's very likely that going forward Berlin will overtake Stuttgart because it has far more diversified population, labor force, industries, while Stuttgart is far more mainstream into the automotive industry. One challenge that German cities would have would be their aging population. And with the aging population, there often comes lack of innovation. So Germany really does need to, and it affected some of the scoring and pushed some of the German cities lower. So young population is very important when you think about growth and future demand. Now to wrap up, we are in a very crucial time at the moment. This year EXPO is different than many of them before. We are going through a low point in the economic cycle. So it's really important to highlight here that when we talk about the winning cities, we also take it from a perspective of how they fit in that wider economic picture. And you can see that there is the gap which has been opening between those few highlighted cities that I mentioned and the rest of Europe. Especially post-COVID, some of the smaller cities in Central and Eastern Europe or in Italy, in Spain, have been starting to struggle, and that orange line on the left-hand side suggests that they have never recovered fully post-pandemic. So the divergence between the cities is very obvious. But we also see it on not just on a city level, but we see this trend affecting micro-locations when we look at investments. It affects the asset quality, but often even the tenants or occupiers. Last but not least, what I want to point out here, which is the livability aspect. I'll wrap up with that. Is, as I mentioned, the extreme weather conditions are part of the index now, and some of the cities stand out and have been penalized quite strongly in the index, which would be mostly in Italy. Rome, for instance, have lost a few points in score because of what some of the data suggests that some of the Italian cities will get hotter in time and much harder to from a livability perspective. So the growth ultimately is stagnating there as well. But with that, I will wrap up and will invite Richard to help us to talk through the panel session.
Thanks very much, Petra. Super. I'm going to give you a clap for that. I think that's good. So, super session that we're going to be running now. I'm just looking at, I guess, some of the key elements around investing, creating livability within cities, and what that means going forward. Let's just start with some introductions. And you didn't really introduce yourself, Petra, before launching into your slides. So let's do that. Who are you? What do you do, Petra?
Petra Blazkova. I work for LaSalle Investment Management, and I run research for Core and Core Plus Capital. I'm based here in Munich, where most of our Core and Core Plus Capitals are, Core and Core Plus funds are based.
Super. Felix.
My name is Felix Gold. Good afternoon, everybody. I'm managing director at DIAC Investment Management GmbH. DIAC Group is a project developer, Berlin-based, and we do our project developments in Berlin, in the metropolitan region of Berlin.
Excellent.
And with a focus on commercial and residential.
And we have to declare that is a picture of your...
Yeah, this is our trophy project now with total investment over 1 billion euro. The Beerensufer, we can talk a little bit later on it.
Yeah, and I'll pick up that as an example, would be interesting.
Yeah.
Hideki.
Hi, my name is Hideki Kurata, and I work with Schroders Capital Real Estate. I run for them the French business, but also the living strategies across Europe.
Excellent. Let's just start. I mean, first of all, in terms of looking at the sustainable future, and by that I mean both on an ESG side, but also the sustainable investment side, longer term investment side. So how do you think, let's start with you, Hideki, just in terms of how can investors ensure that? How can you help drive that as an investor?
I think that it is the responsibility of everyone, right, to push in the same direction. I think that investors, users have all understood that. What we focus on at Schroders essentially is around 4 themes. Technology, which Petra mentioned, which is super important as to how the office actually functions and works, or the other commercial real estate. The individualism is another theme that we have, which also explains, how we think about residential. It's going to be super interesting to discuss this with Felix on his project. Then we have the demographics, as Petra mentioned as well, aging population, and also how the population looks and feels like, which means more students, which means more, elderly people. So what does that mean for, our social environment of our real estate? I think this is super important. And finally, what we call people, place, planet, which is really the focus on the environment. And so taking those 4 themes together, the way we think about real estate is making sure that each of those themes is effectively addressed in the way we acquire real estate, refurbish real estate, build real estate, and operate real estate. And I think this is an important piece, which is we think at Schroders that the operational nature of real estate is taking a more important role today than ever. And as investors are more operators themselves, they effectively capture that responsibility to run those assets sustainably, because it is also very pragmatically in their own interest to make sure that they ensure liquidity for the future and for the long term. So that's how we look at this, and we have a few examples. I think that maybe I can go through. Number one is we can play at, let's call it, national level. So, for example, in the UK, Schroders has a Schroders Capital Real Estate Impact Fund, which is focused on city center regeneration. And so essentially what this vehicle does, what we do with that vehicle is 3 things. We essentially reposition town centers, small town centers. That means refurbishing retail centers, but we also look at office space for SMEs in the regions, which is, again, important for the local dynamics of the economy. And finally, we look at affordable housing, because there's such a discrepancy between those large cities that we've seen the list of and secondary cities, and making living affordable is part of that sustainability equation of societies that are well balanced. So that's national. I think that then you can think about whole areas. In Amsterdam, we have a project which is called, I'm not going to pronounce it well, but it's the old prison center. It's 135,000 square meters. It's been going on since 2017. It's going to be completed in 2028. There's going to be 16 buildings that will have been built. There's already 3 on site. And essentially, you're kind of making a whole area with different uses in the same place, from education, housing, and I'm sure that Felix is going to opine because I know that his project looks like this as well, education and culture, as well as obviously office space and retail. So you need to have something that's more integrated. And lastly, it's at the asset level. So single assets, thinking about as an investor, making sure that each of the assets that we invest in or that we manage and therefore want to reposition are positioned for the future. One of the most recent examples we have in our portfolio in the UK is 55 Bishopsgate. We just got planning permission to refurbish this 200,000 square foot office into an 868 story tower, which is essentially fully electric. It has a garden on the rooftop or on 3 stories at the top. It has active spaces on the ground floor. It has all the good ratings, but the ratings come from a effectively construction process, materials, and go forward, net zero carbon over the lifetime of the building as well. So all of these kind of push towards what we think as an investors is our responsibility, is to push at all of those levels, those levers, social, environment, and at the same time looking at the different uses to make sure that we push in the right direction.
Okay, good. It would be interesting to get your perspective on that. And I also want to pick up, and we'll come to that in a minute, but you mentioned there that idea of being able to transform city centres. But of course, that means that you've either got to work with the other owners in the area as well as the city, or potentially own the whole plot in a way to be able to make that work. So, but Felix, let's pick up a little bit. In terms of, the positive element from Berlin as well there from Petra, which is good. But in terms of the project, what are your aims for people who may not be familiar with it?
So, in first instance, what you told us here, I think it was interesting to see why investors go for sustainability. The first question was. And from my personal perspective, it was good that we had some pressure from the EU legislation, because a lot of people think about social responsibility, but if you then discuss about yields and what you get out of your return out of investment, it was a long time a discussion, do we do a little bit more in this direction, yes or no? And with this EU taxonomy, it changed. We acquired Beerensufer in 2019. And our main investor, so this is a build-to-hold fund structure with German pensions fund behind. He asked us to put a close eye on sustainability, and we changed as DIAC as project developer with this large project, totally from being a project developer for office and residential, made everything out of concrete, no sustainability so much in focus. Totally to the other side, do no greenwashing, not only one wooden house here on the riverside. So we changed it totally to a full scope sustainable area. So that is very important, because now we have a very sustainable model district, commercial district here, close to river Spree. And now it's easier if you do talk to investors again, even by this times, and to with debt financing, if you come with such kind of investment compared to if you don't do this. And if you see lease processes and you want to attract young companies who need young talents want to see sustainability in E, S, and G, and we can provide this as well. So now we are on the good side with this, let's say, direction.
And drilling down into that, how do you see the residential? How do you see the office? How do you see the mixed elements of it working together? And is there a real demand for affordability? Those kinds of things. How have you actually structured that in?
Yeah, so here we have a full commercial district, and there you have to be, as I told you, on the full set of, run the full set of issues.
I was going to say, you could almost walk up and point.
No. yeah, later on. But with residential, so we as resi developer, we tried to do something in Berlin, but it was not affordable. To create affordable rents, it was the prices for the land was too high. So Berlin was totally out of
Okay.
possibilities over the last 4 or 5 years. And we went out to the suburbs or the metropolitan region around Berlin. So we did thousands flats in Schönefeld, for example, there we did, for social responsibility reasons, we did something that we have kind of affordability. That means we are not in the range of 6 to 8 euro. This is so we were in the range of 11 up to 12.50, but it's still 4, 5, 6 euro below the average of Berlin. So you can create this, but it's by now it's tough because of legislation, energy legislation, etc. And with the construction costs, it's not easy to create this, even if you want to go for.
Okay, so that's a real challenge at the moment.
And you need still find investors who want to go in this direction with lower yield and lower returns to go into affordable housing.
Okay. And interesting, we had a session around cities where we picked up some on some of those challenges as well. Petra, it would be good to get from you. I mean, you mentioned there that the research influences the strategy at LaSalle. I guess, how does that work? And particularly if we look at things like the league tables, for example, where you've got some cities above others, does that mean you're then looking towards that city that goes up higher on your list in terms of investability? How does that work?
Yes, certainly. The league tables are, as I mentioned, the first step of when we look at investment in certain cities. But the city is fairly big area and we still invest in assets, right? So it is about the micro markets, it is about the street, it is about the quality of the building, it is about addressing what people who live in those areas would need, and occupiers how they would use those buildings. So it is, the league tables are nice, but it's not a solution. It's just a very first step of many when we underwrite, when we look into investing in a various locations and property types and cities. Yeah.
Okay, good. It'd be interesting just to get a view on, and feel free to pick up the point around challenges there of trying to regenerate an entire area. But are we also now as having to look far more at things like renewable energy, the infrastructure behind cities as part of that renewing an area? Because obviously you have different, there's different things that we need to think about now as real estate investors when we're looking at overall at cities especially.
Yeah, I think that's a very fair point. And what we do as Schroders, and we're not the only ones, is we also have, our real estate business is part of a broader private assets business, where we're managing 90 billion euros overall, of which 30 billion is real estate. And I think that where you're getting to is the slight intertwined interests of infrastructure projects, how cities are built, connected, heated, or refrigerated with the assets and the buildings, and how do workers effectively move from their workplace to their shopping place to their living place. I think this is what livable cities are about, is being able to move around. So clearly there's interconnections between those three. I think that one of the things that ESG ratings actually help all of those constituents do is drive in that direction, because of obviously the source of the energy that is being used in the assets that we manage or build is also taken into consideration in that rating. So I think the easiest one right now is, and I'm not saying because I'm French, but is France, right? Because of the nuclear component of electricity is, and I know it's a topic here in Germany, but it's considered green. And so that helps with making sure that you actually go down on fossil fuels. So indeed, it is about making sure that the whole chain of the environment impact is integrated. And I know that Felix was talking to me earlier about how you're actually generating your power on site.
Yeah, for sure. So what we see is to have an impact here on sustainable, livable cities is that you cannot wait until you have a full set of master plan, especially in Berlin. They have no long-term projection, the politicians, what they want to do and what is to do. We have discussions to bring out the individual traffic out of Berlin, to do more for public transportation. Sometimes you have the discussions about sponge city. I don't know if it's the English expression. It's Schwammstadt. So that means that you have not the seal is you have you have more green, less concrete surface, and you keep the water in the city, and to do something for the city climate. And you discuss some other topics, but to do it in a kind of master plan is not so easy. And now we push and we drive these topics and these ESG topics with 3, let's say, lighthouse projects who have this very much in their focus. It's the Siemensstadt Tegel and our Beerensufer, where we have the full set of renewable energy production on site. We do everything which relates to resource-saving building materials, as with wood, hybrid wood construction. We use for climatization clay ceilings in the new buildings. We do a lot of refurbishments with the monument-protected buildings. So we do a lot of things for the energy points. We open this is brownfield development, former industrial district here to the public with a nice riverside with 82 gastro spots. So we do a lot of things to be open for the public, and we set up a community building. You have participation we created 4, we call it innovation labs. These are networking platforms with relating to development, sustainability, food, and art and culture, to bring this together and to create a very good and vibrant commercial district. But you see it's very much located in an urban location, so we have residential close by. So there's a nice mix in this part of Berlin, the southeastern part of Berlin, and the boom corridor between City East and the airport district.
And there's been some interesting developments. I mean, I think it was around this time last year, Petra, where there was the tree building in Munich, and that I think is a bit of a game changer in terms of ESG sustainability within the city as well.
Yeah, for those of you who don't know, it's the first timber frame building here in Munich that we building for one of our funds, and it's amazing to see how much interest we get from the future potential occupiers in the asset.
Yeah.
Just purely because we take lots of the ESG boxes in the building, and that's from the one angle. But from the other angle, also the investors who obviously we represent here, and we are able to preserve the value of the office building and individual assets. So we completely. It's becoming a no-brainer that the value preservation and the ESG go hand in hand, and obviously it comes with the energy efficiencies as well. But it's a great example of how easy it is to attract the occupiers and future income and all that. Yeah.
And one thing, I mean, I can see there from one of the things I guess is that. If you're going to put in that much greenery into a project, the time to do it is at the start of the project because it's more difficult to retrofit. And I was in Singapore last year looking at some of the biodiversity there, just how the green elements were brought into the city. And that also had a cooling effect, not just on the building that you were in, but on the surrounding buildings as well. So that's quite interesting. The point you made earlier, I thought there, Petra, about climate adaptation and how we can also influence climate adaptation. And is that going to be a trend more going forward as we begin to see investors particularly looking at climate resilience, for example, as an element of, I guess, more of a risk element really when we're looking at city investment?
Yeah, I think it's not necessarily limited to cities. It's a general approach. I know that at Schroders we have over 75 ESG specialists. We have about almost a dozen actually focusing just on real estate. And one of the elements that we work on actively is understanding climate risk. So I think it kind of connects a little bit to Petra's analysis of the heat waves, the number of iterations of heat waves and extreme weather conditions that you may see in certain areas. So we're also trying to have a look and essentially put markers, get the data to effectively say this is riskier than another asset for such and such reason. Yeah. And I think that as an industry, all investors are very well aware, as we see and as we discuss with our insurers from an insurance perspective, some premia are actually already rising, and we do expect that to continue to increase in certain areas for events that up until now were not events. Yeah. So clearly the climate risk environment is evolving in a direction which I think that planting a few trees on a building is not going to change that. However, not planting it will definitely not help. So I think it's part of making sure that we do not negatively impact the overall climate. Felix's example of the sponge, soil is in France they call it anti-artificialisation. So they don't want to have the more artificial ground, right?
Yeah, that's right.
So I think all countries and legislation is going in that direction as well. But as investors, developers, one of our roles is to anticipate those rules, because we want to be, ahead of those rules and effectively do right and do good in order to do great.
There's around 5 minutes left, 6 minutes left. So if anybody's got a question, think about it, put your hand up. I'll be scanning the room. But I want to just pick up on a couple of small things. So we had a session around social value earlier. And it's quite interesting that, it's a huge cost to get to the very end in terms of environmental. But actually, for social, you can do quite a lot on a relatively small basis. And are those sort of small initiatives, maybe don't cost as much, but still have a potentially high impact for the community or biodiversity? Are those initiatives that you're beginning to put in place more frequently now, or?
Can I use an example here? We just repositioning and redeveloping an asset in London, one of the big city office buildings, and lots of the existing steel that is in the building and is being reused. I think our ESG team would suggest it's like half of Eiffel Tower steel used there. And the rest of it, we actually donating to one of the school developments on the suburbs of London. And that social element of charitable work and all that and helping local schools is actually drilling down all the way to how the financing of the building will plan out, and that interest from the banks who are providing the loan on the development is they actually quite keen on financing such a big, again, office project, which could be challenging, but willing to go ahead because of that S in the ESG as well. So it's a really interesting example as well for us.
No, great. And another point was obviously in the global financial crisis, ESG, sustainability took a bit of a backseat, and everybody said, okay, well, we need to reset now. But where are we now? Because that doesn't, to me, from looking at it, that doesn't seem to be the case. So what's the position now? Do we think it continues in that trajectory? Do we think we accelerate, decelerate? What's your sense of that?
I think that essentially it's keep the pace and accelerate the pace wherever we can. Yeah. I think all investors do realize that there's a lot of catch up to be done. The reality is that the real estate, as it is a built industry. It's not a movable industry. So you can't change it with just deciding it. It takes time. You have to have tenants moving out, and then once the tenants are out, then you can renovate. So when you're thinking about the existing stock, it's already a very, heavy ship to move. So I don't think that anyone can afford to think about slowing down.
Mm. Yeah. It's what I said about the cities as well. You have the divergence between the winning cities, the cities that can grow, and the stagnating one. And it's the same with livability and ESG, where you can preserve the value versus everything else that won't be able to do so. So that the divergence will be, in our view, getting bigger and bigger.
And from my point of view, it's very easy. We don't see a stop because we have pressure. So it's EU taxonomy. You have to avoid stranded assets. If you build new buildings, you have to be in line with Euro taxonomy. If you don't do it, you get in trouble with financing, insurance, with investors, and your exit later on. And on the other hand, if you don't spend enough money for ESG, especially for S as well, then you have no attractive product. So, and no attractive product is no tenant. So it's very simple formula for me. So
I would even argue that it's probably accelerated in that it is now top priority. I think it was one of the priorities probably pre-COVID, and every investor understood that. I think that since those years, it is now top priority. So if anything else has to give, it's something else.
Yeah.
Okay, and in terms of, I guess, when we're looking at investability, attractiveness of cities, have the key elements changed? And what are you looking for? What makes you decide that this city is attractive and we want to invest there?
For us, it's about the people that live in those cities. I mean, it is very important to make sure that the cities are livable, that there is growth, there is employment, future employment. So that makes the occupier demand, that makes prospects for us as real estate owners.
Anyone else?
I would second that, and clearly I think Petra's description of the index, which is 30 years old, still is very up to date. It's effectively dynamism, the economy, but also quality of life factors and transportation, especially when you're thinking about European cities or Asian cities that are very dense. I think that public transportation is a key factor as well.
No, that's interesting, and it's been because I've seen I haven't watched it for the whole 30 years that research has been going on, but I have tracked it certainly over the last 10, and you can see livability, sustainability, those elements actually taking a higher position, I think, in some ways, as we've gone through that, and that's been fascinating to watch. So I'll be interested to see it next year as well, and see what's changed.
The point on the infrastructure is also really interesting, and reading the news about HS2, for instance, in the UK, what impact it will have on the north versus London. It's actually bit sad that it's heading that way.
I was hoping that since a lot of EXPO Real for the past 3 years have been talking about the chaos in the UK, I was hoping I wouldn't have to discuss that. But you are right.
Point, I can imagine.
Good. Thanks very much. Thank you to everybody for being here. Thank you as well to everybody who's watching this on demand as part of our live program at EXPO Real. Thank you to the speakers, and there's kind of 10-15 minutes to network chat as well before the next session, which will be on European logistics investment. So if you're interested in European logistics investment, we've got another super panel coming up for you in 15 minutes. But in the meantime, thank you to everybody here, and thank you to the speakers. Thanks very much, everybody.
Thank you. Yeah.